Hello, everybody. Welcome back. Hope everyone's enjoying their weekend. Hope everyone had a good week, and hope everyone has a good week coming forward. For the Sunday stream, we're going to take a look at Bitcoin, BTC. Nothing's really changed because we're still technically stuck in this range. However, we have had a new development. We did make a new higher high, just like we were talking about last week. This is our first sign for a true bullish market structure. Now we really want to see it start grinding up, create a new higher high, and then a new higher low, and then a new higher high again. So first sign of the bulls coming forward. Although this strong move back up into the 50% of the range was also a bullish price signature as well. So the bulls are starting to show some strength. That's the key thing here. Now we need to see if they can maintain that momentum and sustain it. So let's go ahead and take a look at the bullish count. There's currently 2 bullish counts. Let's take a look at the first one that we've been really observing. So this count really just all is developed upon this being a leading diagonal. The main reason is because this low up into this new high that was created right here was pretty much a 3-wave move. 1, 2, 3. It doesn't have any structure of a completed impulse that's valid. A 1, 2, 3, 4, 5. It doesn't have any of that structure. So therefore, the only way we can be bullish off the lows with a 3-wave move is if it turns into a diagonal. Like this. Which is something that we're looking for right now. Last week we basically said that really in order for us to have some type of faith in this count is if we start making that new higher high, which is finally what occurred. It's about now really looking for that retrace and then one more move up. We need to look for another 3-wave move because when it comes to a leading diagonal, they can't be hybrids. It cannot be a 5-wave, then 3, then 5, and then 5. It can't be a 3, 5, 5, 5, 3. It either has to be a 5, 3, 5, 3, 5, 3, 5, 3, 5, or it has to be all 3s. That's it. So given that we started with a 3-wave move, we already discount that first variation, and now we have to look for this variation, which is why we're looking for all internal 3-wave moves. So nothing's changed here, but once again, we have that first sign of strength from the bulls that we need to see if they can maintain it and sustain it and move us towards higher prices here. Now, the variation, the bullish variation, is a complex WXY, where this was a zigzag into a running flat into a triangle, where we have honestly some beautiful time symmetry between the W wave and the Y wave, which is something that I look for when it comes to WXY combinations. So this is a very valid count, and also this proposes a different perspective too, because now that we have this as a very impulsive wave 1, the possibilities are endless. We could say that this is only a minute wave 1 and that we're building a minor wave 1. Or, once again, if we're trying to be moderate and look for the moderate targets for a wave 5, we can say that we really are in a minor wave 1 and we're going for a intermediate wave 5, where we're going to end right in the moderate wave 5 targets. Once again, though, since this is such a bullish structure and it's not that three-way structure, the possibilities are endless for this being a lower degree or a potential higher degree wave 1. If it is a lower degree wave 1, then we're going to expect a move up pretty much to the double extension, a double extension for a wave 5, which is something that we'll have to monitor when we get there. Once again, we're not placing too much weight. It's more of a conservative approach to say that this is a minor wave 1 working for an intermediate wave 5, especially considering the timing of completion for the prior minor degrees. So if you look at this W, we compare it to this over here, it's basically signaling to us that, we shouldn't expect this to drag on extremely long for a minor wave 1, because these minor degrees were less in time. This finished way before this structure. So to me, it's always better to be conservative. So I really would probably consider this to be a minor wave 1 into a minor wave 2, building into that intermediate wave 5. But once again, we can't discount a lower degree wave 1 just yet. Now, from a bearish perspective, things are still progressing along very nicely as well. We have two bearish counts that we're looking for. It's all building off of a higher time frame flat. The first count is a expanding leading diagonal, where potentially we were looking for this to be a protected low, and we were looking for a break of the highs. We're looking for push up, retrace, and a break of the highs. We pretty much got that. We got a push up, retrace, and a break of the highs. So it really could be the W, X, Y, or this could just form into a potential flat, where this is a WXY for an A wave, and then we retrace for a B, just like I have shown right here, for that B wave, and we push up for that C wave, just like that. However, just like I kind of discussed last time, if we truly are bearish, what I would like to see is this being the completion of the wave 2. Because if we truly are bearish, we don't really want to hang up here that long. We've been hanging up here since March, almost half a year. If we truly were bearish and we're building a base to go down, I would think that after this completed 3-wave move, we would start moving down for a new impulse, like this. But until we really break past this expanded flat zone, even then, the 1382, we truly can't be that bearish yet. Once we break beyond this with strength, then we know for sure that this was a completed 3-way correction and we're building an impulse for another move down. But until then, this still could be a A wave, bounce up for a B wave, and then move down for a C for a B of a flat, and then move up again. It wouldn't be ideal to me from a bearish perspective, but we can't discount a flat, especially when it comes to 3-way moves. Lastly, we do have the 1-2-1-2. It's very, very close to invalidation, however, because if this is the end of our wave 1, then we had that nice running flat. That was the end of our wave 2. We can't have price go beyond this high, this extreme. If it does, then it completely invalidates this idea. So very, very close to invalidation on this count. And again, the more that we hang up here, we continue to create bullish market structure, the more it bleeds into the higher time frame as well. And it also begins to discount these counts right here, the one we just discussed, and even potentially this one. Although ultimate invalidation is going to be this extreme high, because that was the origin of this wave 1, and this wave 2 potentially is not done yet. It could pivot higher. Ultimate validation is here, so it does still have some room, but once again, the more that it hangs up here, the more that it is a bullish perspective. So let's go down to the lower time frames here. Now, last time we were looking at this, it was either a B or an A or a W or a 1. But now, since we made that new higher high, we no longer are looking at this as a B wave. So we can totally take that out of the equation. And we're looking at this as an A or W or 1. Now, alternatively, since there's that potential Y wave out there as well, we can label this a potential Y question mark, because it's a variation. And instead of looking at this as a wave, we could alternatively look at this as a wave 1. This is why I like Elliott wave, because regardless, we're either looking for a wave B, which we have shown right here, or this could be a wave 2. Regardless, we're going to expect a 3-wave correction. And afterwards, expect a new high for continuation. Either for a wave C or a potential wave 3. If this actually is a wave Y right here, and this is a wave 1, and this is a wave 2. This is how we continue to manage expectations with Elliott wave due to internal structures and external structures. So everything's moving forward here. Once again, if we really are looking for a diagonal, we want this to be a 3-wave move. And then also another 3-wave move for a wave 4. And then a 3-wave move to take the high again for that wave 5. And be contained within this structure. Otherwise, if we really start to move up aggressively, we're going to look for this narrative right here. So not a whole lot of updates to provide, but things are progressing exactly as what we wanted to week after week after week here. Now we just have to manage our expectations, meaning if we take this low, we're most likely going to have to look at our bearish alternatives. Breach this low, prepare for bearishness. Breach this high, Prepare for foolishness. These are really the key levels that I can see right here in the lower time frame. And coinciding with Elliott wave theory, if we're looking at this as a W or 1 or a 4 or a 1, looking at this as a or W or a 1, looking at this as a wave 2, and looking at this as a wave Y. Because if we break this low, then we're ultimately invalidating this wave Y, we're ultimately invalidating this wave 2. If we take this high, then to me, we're pretty much invalidating this lower degree wave 1. And the only thing left is that expanding leading diagonal on the higher time frame. So we would have to discount this A right here as well. The only thing left would be that expanding leading diagonal, and this being a W, and this being an X, and then it's moving up for a Y, where the Y isn't completed yet. However, that would be unfavorable, purely from a time perspective. Because if we, let me get this out of the way. It'd be unfavorable from a time perspective, because if we were labeling this as a W, labeling this as an X, and labeling this as a Y, just like I was discussing earlier, when we talk about WXY combinations, we'd like to see that time relationship when it comes to W and Y. If we compare these, we pretty much got that beautiful time relationship 1-to-1 right here. However, once again, if it retraces for a potential B, and then moves up again for a C, where we have to force moving over that wave Y, that time relationship is extended. And it's no longer proportional. And at that point, what does it look like to you? Pretty much like it looks like a diagonal forming at this point. Because the swings are getting lesser and lesser and lesser and being contained within this range still. They're not moving aggressively out of this zone, and they're not moving aggressively out of this zone. It's being contained. So it has the makings in the narrative of a diagonal at that point. So once again, if this was a WXY for our intermediate wave 2, this has a good narrative for it because of that time relationship. But break that high and go for this high, then we ultimately validate that bearish narrative. Again, though, we can't discount the expanding leading diagonal until we take the origin of that wave 1, which is this high. So we still have some room to run, but again, the higher we stay up here in this zone, the more bullish it is from a lower degree and a higher time frame perspective here. So by the end of October, I expect we'll have some sort of completed structure to really start to put a lot of weight moving forward, because we do have some time for this to build out still. But by the end of October, I expect us to have a greater idea of what to expect moving forward on a higher time frame perspective. So that's all I've got for today. And again, if you enjoy the stream, please like, leave a comment. If you're not subscribed, please consider subscribing. And also consider dropping by the Discord to discuss Elliott Wave with me privately or publicly. However, I hope you guys enjoy the rest of your day. And truly, thank you for watching. Hope you guys have a great day.